Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right. No extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to another episode of The Wealth Flow, and I'm excited about today's guest, Mr. Chris Salerno. Chris is an experienced CEO with a demonstrated history of working in the real estate industry. He's skilled in sales, management, teamwork, leadership, and project management. He has a strong business development professional in multifamily industry. Chris attended Wharton Business School and Winthrop University. Chris successfully transacted more than $40 million in real estate volume, and he helped lead the number one team in the Carolinas, producing more than $140 million in annual sales. And certainly impressive at a young age, really. He was also named Charlotte's 30 under 30 and one of the elite 50 entrepreneurs, 30 under 30 entrepreneurs, and nominated from the prestigious Forbes as 30 under 30 for not just 1 year, but two, 2018 and 2019. He has since created QC Capital, which is a leading private equity investment firm specializing in the acquisition of institutional quality multifamily investments in the Southeast United States. And their team is specialized in identifying and acquiring top performing assets, as well as identifying operational efficiencies to drive strong returns for their investors. And they have a personal mission to help accredited investors achieve financial freedom through multifamily investing. So Chris, welcome to the show.
Yes, thanks so much for having me. Very excited to be here and give back some knowledge to your listeners.
Awesome. All right. Well, I think if we can maybe just start a little bit from the beginning. Obviously, you've got an extensive career in real estate, and it looks like maybe starting in the real estate agent space. Is that accurate or?
Yeah, so I was a real estate broker around 9.5 years ago. Started out in residential real estate. From there, I built a company in my first year and a half, did around $40 million in annual sales. After that, I sold it to the number one team in the Carolinas, and in that agreement, I was their COO. I then took them from $92 million in annual sales to then $147 million. Enjoyed that time while it lasted. However, definitely saw the grass was actually greener on the other side, and ended up creating QC Capital, which is the private equity company to acquire large multifamily assets. And now we're slowly venturing into the car wash industry.
Fantastic. Well, we'll definitely dive into all of that, and great background. Prior to being an agent, being a broker, did you have any experience in real estate investing, or did you go straight into the multifamily?
No real estate investing. Had experience in sales and business at a very, very young age. I was always intrigued with analyzing businesses, why they failed, why they're profitable, the ins and the outs, the little things you have to tweak to make them profitable. So I was always intrigued with that at a very young age, and that has helped me get to where I'm at today.
Okay, perfect. Well, let's talk a little bit about QC. It sounds like where geographically are y'all investing right now?
Yeah, so we're based out of Charlotte, North Carolina. Geographically, we're through the whole Southeast. So the Carolinas, Tennessee, Georgia, Florida, and Texas markets, those prominent markets and their MSAs.
Okay, perfect. And you mentioned in the bio that you focus on institutional grade. What class of is this? A class? Is this B class investments, or what?
Yeah. Great question. Our main criteria is 2000 to present. We really strive for that newer type of asset, and it's 100 to 350 units. So your newer assets and larger assets. We really don't like to go below 100. We will, depending on the market and where it's located. However, our main focus is 100 to 350 units and your newer type of product.
Yeah, and so obviously there's economies of scale. The larger number of units. Can you maybe describe why you've got that as far as the buy box and of the 100 to 350 units, and kind of what you do as far as deciding what type of an investment to go with?
No, yeah, very much so. I think from our experience and my personal experience, when you manage a 20, 30 unit complex, it can be more work, more labor intensive compared to a 100 to 350 unit type of asset. And also with the larger assets, you have a larger profit for your investors and a larger buyer pool. The smaller type of assets are more your mom and pop type of buyer pools. You have some private equity companies in there that are just now getting off their feet, that are buying smaller assets. However, the larger assets are more of your institutional type of buyer, which you can sell to a larger profit because they have lower return thresholds than you and I would.
Right. Makes sense. And so with that, you guys have gone, you currently have 1,000 units under management and have gone full cycle on 4 deals. You want to give us a little bit of flavor on that as far as what, were all of those home runs or base hits, or what, how did those go?
Yeah, thankfully, we timed out the market very well. We saw the cap rate compression and we said, okay, now's the time to go ahead and sell. And so thankfully, we were able to sell those assets. I would say we had one in there that was a smaller unit, 44 units, the first one we ever acquired, which was a double. Where we did exceed our pro forma returns.
Okay.
However, definitely wasn't a home run like our other assets. Our other assets, we hit home runs and grand slams. On average, our LP IRR was around 28%.
Wow.
Currently still is on average, with the net being over 35 of ARR. So still great type of returns, especially in this current market environment. We saw the opportunity of the cap rate compression and we sold.
Okay, perfect. Yeah. So were those recent sales over the last, how many, when did you exit those? Just out of curiosity.
Sold one last year, and then prior to that, sold the other 3.
Okay. Fantastic. And what about management? Are y'all doing the property management? Are you doing the asset management? What does that look like within?
Great question.
QC?
So we do asset management in house. We do third party property manage. We may bring that in house soon. However, our main focus is finding great quality deals and operating those. So we third party our property management out, and our asset management is done all in house.
Okay, fantastic. And how about as far as the market? Obviously, you've been doing this for a while now, and what have you seen as far as changes on the horizon, or current changes in the industry, and where do you see it going?
Yeah, no, I definitely see it being extremely difficult for some times to come. I think with the Feds pausing rates, but indicating they're probably going to do 2 more rate hikes this year, I think you're going to see a lot of individuals troubled in water. I think there's going to be a lot of individuals that are going to need and be forced to sell at a loss. We're already seeing it now. We already have a couple of deals that are in our list that's the sellers are having no rate cap, unfortunately, and they're bleeding every single month. They're running at a loss, so they want to sell as soon as possible. So I think you're going to see a lot more of that. I think you're going to see a lot more disconnect between buyers and sellers because the Feds have not stopped or indicated that they're not going to stop raising interest rates. And so until they start to taper those interest rates down, I think you're going to slowly find that happy median between the seller and the buyer when it comes to purchase price. I think come next year, they're going to taper them down. We all have to keep in mind there's a huge election coming up. Interest rates are correlated with politics, so they're going to want to lower those interest rates so a certain party can stay in office and say how well they did for the economy. So I think people should also keep that in mind. However, I do see them tapering them down next year for that particular reason, and there will be a shorter disconnect when it comes to purchase price amongst sellers and buyers.
Yeah, and maybe for the listeners, our listeners are primarily high income sales professionals that, quite honestly, want to invest in real estate, but they don't want to have to deal with the toilets, the tenants, those kinds of things. And so I think what you guys have to offer is great. But with that, when it comes to the investment itself, what are some of the advantages of multifamily and specifically investing with you all?
Yeah, I think the advantages are, thankfully I've been able to build out a very strategic team where our customer service experience is top notch. You're going to get that white glove service, that type of communication that you need, especially in times like this. Times like this, we went to bi-weekly updates on how the properties are doing. Instead of monthly updates, we're bi-weekly updates now. Even though if last week was the same as this week, we still let the investors know about that. I think with so much uncertainty in the market, it helps to over communicate. And a lot of other groups do not do that. I've noticed it. I've been involved with other groups and they do not do that. So I think that white glove service is top notch. Also, we're always investing alongside of our investing partners. My own personal capital is going into these opportunities as well. And we will not buy a bad deal. And I think I know our investing partners know that. We backed out of a deal in Q1 of this year. The insurance spiked. It was a HUD assumption. HUD came back and changed the loan terms on us. So we backed out. We had around $600,000 hard. And we backed out because we did not want to put our investors into a bad deal. And so we decided to go ahead and back out. We'll fight for the earnest money. And we'll go ahead and talk to our investors about taking that capital that they currently have in our fund into a new opportunity, which around 85% wanted to go ahead and move into that new opportunity, which closes here in a couple weeks. So we're super excited about that for them. But those are some things that our investors really love investing alongside of us, is they know our discipline, they know our criteria. We're not just going to go and buy a bad deal because we want a bad deal, we want a deal because of the current market environment.
Yeah, no, I think that's great. And what about as far as we're just out of curiosity on the one that you had under contract? What state was that in? I know we're seeing that across the Florida in particular, but a lot of other places where you just the insurance rates are kind of going through the roof.
Yeah, that was in Houston, Texas.
Oh wow, yeah, okay. Well, hurricanes and whatnot. So.
Oh, I know. Yeah, insurance spiked tremendously there.
And then what about deal flow? How so? Obviously, you're working with brokers, but how else are you coming across deals? Are these mostly on the market or off the market that you're finding, or?
Yeah, I mean, most are on market. Very rarely you're going to find off market deals or true off market deals unless you know the owner. Very rarely you're going to find that. Most you're going to find on market deals because institutions have a fiduciary responsibility to their investors to try to get the highest price or the best terms. And so you're going to see a lot on market. Even with the quote unquote off market, they're going to still shop it around to a couple buyers. They're not going to, very rarely say, hey, here's a deal. And if they're coming to just you directly, I would also question that, what's wrong with the deal?
Right.
So, for example, we have a deal that we're underwriting 4 months ago. It was us and 3 other groups that he brought it to. Well, we lost out because we were at 22. The other group was at 24. We said, okay. The other group did not transact. They came back to us last week, said the deal's available. Seller needs to sell because they have no rate cap. You want to buy? Sure. Send us most recent financials. We're like, well, we're not at 22 anymore. We're at 18, and we know you bought it for 21. So you might as well accept our offer because if you wait a month, our offer is probably going to be 14 due to the current market environment. So it's up to you. If you want to give it back to the bank. Hopefully, we'd rather take it off your hands before then. However, you need to go ahead and understand where the current market environment's at. And so we are having those type of conversations right now, but it's mainly coming through broker relations. Me being used to being a broker, we strive to have great broker relations with our brokers to bring us phenomenal opportunities for our investors.
Okay. And tell me a little bit about underwriting assumptions, those kinds of things. Has any of that changed over the last several years? And if so, from a rent increase, what are you projecting or what are you putting into your underwriting?
Yeah, great question. Yes, it's changed substantially. I think when it comes to rent increases, we really won't go above 3% in a market. Mm-hmm. With growth, we are watching it extremely closely due to the current market. I mean, there's some markets right now that we have assets in, and all of our comps are decreasing their price. So if all your competitors are decreasing their rent value, how can you push rents? You really can't. So you have to come up with strategic and unique ways to gain other income at properties. So yes, we are watching very closely our rent assumptions. Also, when it comes to that exact dollar amount, some people will say, oh, well, a 7% rent increase is a lot. Okay, well, what are you comparing it to? The one deal that we're looking at, it's only a $65 rent bump. Okay, that's a $65 rent bump's really not that bad in that current market environment, compared to a $400 rent bump. That's unachievable right now, in my opinion, in the current markets we're in. So that's one thing I look for as well, is that when our head of acquisition comes to me and I see, okay, there is a 4% renovation rent bump. Well, what is that 4% actually tallied to in dollar amount? Okay, it's $65. That's not bad. But if he came to me and said it's 200, I'm going to say you can't do that right now. And he knows that, so he's not going to come to me with something like that. So we're watching the rent increases substantially. We're also watching the expenses. We're pouring more money into marketing. We need to market these properties amongst our competitors to get that traffic in for our on-site team. So we're looking at that. We're also looking at other ways to spruce up that other income. What are strategic ways where we can boost that other income up and really boost that bottom line net operating income up?
And when you say other income, can you go a little deeper on that? What additional besides rent? And again, just for the listeners, in case they're not familiar with multifamily.
Yeah, most definitely. Other income is a line item that we use and have the ability to gain other income based off of different type of services. So, for example, trash valet. Trash valet normally is around $10 per unit, where we can then charge anywhere from $20 to $30 depending on the current market. I know some apartments here in Charlotte, they're at $40. So that's all depends. You have amenity fees. You saw some complexes charge amenity fees. You have other different type of fees that they will bake into that other income. One that we love is Wi-Fi. Everyone needs Wi-Fi these days. It is what, everyone's going to need it no matter what you do for your smart TVs. Very, very rarely people are using cable packages. So you're really seeing more on the Wi-Fi side. And so what we're doing is partnering with Spectrum, Comcast, where they're charging us $30 per unit. And then we're going back and offering a bulk Wi-Fi package to the whole property. And we're charging them, depending on the speed of the package, 60, 65, $70. So we're getting that delta. And that delta goes into that other income, which boosts that bottom line net operating income, which overall will boost the valuation of the property when you go to sell.
No, I think that's great. Yeah, that makes a lot of sense. That's the second time I've heard that in the last week and a half. So it's a great strategy for sure. How about when it comes to the investment itself? Obviously, trying to get that other income, trying to do what you can with the rents. But how are you when you're sourcing deals, when you're going through them and kind of deciding if they fit your buy box? What are you doing to assure that there's room to be able to increase that NOI so that you can provide the fantastic returns to your investors?
Yeah, I think, when it comes in there, it's really, before we buy, knowing the market very well, knowing how far we can boost other income and going deep with our comps. I mean, our head of acquisitions in our criteria calls every single comp, secret shops every single comp. When we go ahead and visit the property, we also visit every single comp to get an understanding. What is our comps doing? We may learn something that they're doing and it's working in the market that we didn't even think of. And so it's very helpful to go deep with them because those are who competing with our properties when it comes to tenants. So we like to really get a good understanding of our comps. Also with newer technology that's always rolling out on a daily basis, we like to get a good understanding of that technology to see, one, how can it benefit our residents at our community? How can it benefit our investing partners? And how can it grow the property's overall value?
Okay. Fantastic. And then as far as the investment itself, maybe on some of your current offerings that you're going to be hopefully closing here real soon, what type of a preferred return, or do you offer a preferred return, or what's the setup or the structure of that deal?
Yeah. So our preferred return we offer is a 7% preferred return, which is annually, and that is compounding. So if for example, if it's 4% in year one, 3% will be tacked on to year two. Our IRR, we always like to underpromise and overdeliver. Our range of our IRR, we really don't like to go below a 13%. So our range normally sits anywhere from a 13 to an 18% when it comes to IRR. Obviously, our historical track record, we've been able to accomplish a lot more than that. But we like to always underpromise and overdeliver when it comes to our acquisitions of our assets. So that's a range of a IRR. We always strive to hit a 1.6 to a 2x within that 5-year time frame, and we provide monthly distribution with monthly updates. We are also diversifying here in the Charlotte area, and we are going to be developing ground up car washes, and those ground up car washes are going to be extremely unique. We have found that in this current market environment, people want cash flow, so we're actually offering a 12% pref on that. 12% nice. Pref, and that is monthly distributions, and that 12% is annually, and then an 8% on the back end. So when we sell the property, you'll get an 8% on the back end, and that's it.
Fantastic. Is that a franchise, or how are y'all doing the car washes?
Yeah, so we're developing them from ground up. Our local distributor is actually based here in North Carolina, which is phenomenal because if anything were to go wrong, maintenance-wise, warranty-wise, within 1 day, we've already got this in contract with our agreement. Within 1 day, they are at the property addressing the issue that is wrong. So we already have the team in place in regards to that. We are developing them from ground up, brand new type of concept model, no employees on site, but it's going to be a full bay, free vacuums. We're very excited to release it. There's really nothing at scale here in Charlotte with this concept. There are two companies, Autobell and Sam's Express. They have employees, and it's a different type of concept. Ours, no employees on site, and more of a do it yourself. You drive in, car gets washed by itself. You then drive, vacuum yourself, and you're good to go. So it's a more of a self approach compared to on site employees.
Yeah, I think that's good. I did see there seems to be the hot item right now is the car washes. I've seen a lot of people shifting to that, or at least expressing some interest in it. And it's always been a good business. But you mentioned cash flow. 12% pref is strong. What are y'all looking at? How this has performed in other places, or is Charlotte kind of the starting grounds for y'all?
Great question. I actually, back in my younger days, I worked at the competitor car wash in Charlotte, so I understand and know the operation of it. We want to start in Charlotte because it's our backyard. We're headquarters here in Charlotte. I've been here 16 years, and combined with everyone on my team who lives in Charlotte, we've been here more than 45 years, so we know it very well. We want to start in Charlotte as there's still a lot of room to grow in Charlotte when it comes to competitors. Also, we're building that strategic brand, and it's easier to do that in one geographic area. You also have higher membership costs, which that is the key, is the memberships. So if you're building 40 to 50 of them within a geographical area, you're going to have higher membership costs, because if you're in a different part of the city, you can go ahead and get your car washed. Compared to, which I've seen this firsthand, groups are buying in Virginia, Alabama, Georgia, Tennessee. I understand the benefit of, okay, my car wash is right down the street, I'm going to have a membership of it. But, the benefit of actually having multiple car washes in that geographical location is, in my opinion, a lot higher, because if I'm in, 45 minutes from the house and there's still that car wash, my membership is good for it. And I can pop in and get it done real quick before a meeting or anything like that. So we are starting where we know best, which is our headquarters of Charlotte, North Carolina. Thankfully, it's a phenomenal market for this, and it's growing substantially.
Tell me a little bit about cost. What does it take to develop a car wash from the ground up? Obviously, you got the land expense as well, but on the ones that you're currently doing, about how much is the initial investment?
Yeah, so it all depends on the type of opportunity, the type of land, including the land, and including all the building costs. On an estimate, it will cost anywhere from 1.9 to around 3 million for an all-in cost. And so from there, it's extremely lucrative in the aspect of the cash flow that these opportunities provide. Statistics have shown from the Car Wash Association that at least one time a year someone will get their car washed. At least one time a year, someone will at least get their car washed. That's
me. I'm the one time a year guy. No, I'm just playing.
See, I'm the 3 to 4 month type of guy. I like a nice.
That's more common.
Correct. And you're seeing that because your car reflects who you are as an individual. If you're pulling up with a dirty vehicle, that can reflect who you are. Now, I have a younger son, so I try to get him to keep the back seat clean. That doesn't work all the time, but we're working on it. But most of the time, my exterior is clean, and a lot of people are in that same boat where they're doing it 3 to 4 times a month because they want a clean car. They feel better. And statistics have shown as well, they've done studies on it, that you actually feel better internally when you have a clean car. So with those numbers backing it, year one is substantial. And I'm coming from a marketing side as well, what I've learned at Wharton and things like that. So we're putting a touch, which the competitors here in Charlotte are not doing, which is social media marketing. I do that with the company right now, work very closely with our team, and that's what we're going to do to really separate ourselves to get more memberships is that social media marketing.
Yeah, I think that's smart. And I would think, also from other companies, that have fleets, that kind of thing, would make a whole lot of sense as well to keep those clean. So. What about initial? So if it's a $3 million deal, are you having to put all that cash up front, or is part of it going to be leveraged? What does that look like when it comes to these opportunities?
So it's going to be leveraged. Real estate, we've known that you got to leverage, so it's going to be leveraged. It's going to be around a 70% loan, conventional loan, regional bank, not regional to Charlotte, however, very well diverse and experienced in the car wash industry. That's mainly all they lend on. on. And the loan to value is around 30% when it comes to these type of assets. And that includes the land, development costs, and all that.
Okay. Yeah, that's very interesting. What about going back to the apartment just for a minute? From a how much are y'all? What's the loan to value on those typically?
Right now in this current market environment, we're seeing anywhere from 50 to 70% loan to value, and that's where we're staying. We've been staying around 62 to 65%. We're seeing that across the board in the whole market.
Yeah, I think that's smart right now. It's just, especially with, like you mentioned earlier, with rates going up and stuff, there's a lot of people that are getting in trouble with just the underlying rules that maybe some of them haven't read all the way through. But as far as making sure that they have X amount loan to value, and if the values are declining, then that puts you in danger of being in default. So good. And then, so switching over to the car wash again. So you mentioned you worked for one of the competitors, just out of curiosity more than anything else, because that was my high school job, at least in the summers, was working at a car wash, Genie Car Wash in Austin, Texas. So
there you go.
Yeah. So I was a finisher there, but what type of a role did you play at the car wash?
Yeah, very quickly I understood business, like I said earlier. So I started out as your lower, entry employee, helping people get memberships, helping people, pick their wash, scrubbing their cars, all the way up to around assistant manager where, I understood the books, made sure, shut down each evening, cashed out, shut the books each evening. So I got a really good sense of understanding that, making sure chemicals are switched out, ordering, if we need more chemicals, towels, things like that. So, and I did all that within about 8-9 months, very quickly scaled up. And it was a great location. They were producing around 100 cars per hour on a good Saturday, Sunday. They were producing a lot. So it was a phenomenal location that they had. It's one of their highest producing locations that the company has within their whole portfolio. So I've always been intrigued with cars. I think most men are. And then when I started understanding, the business aspect of it back then, and then now even more revisiting it, I think it just makes sense in this current market environment, instead of trying to hunt all these deals for multifamily and they're just not penciling in. Sellers are still very far apart from realization of where the purchase prices are. It just makes sense to go ahead and diversify into a income type of producing asset.
Yeah, I think that makes a whole lot of sense. And I'm seeing that, like I say, with other syndicators and folks just, multifamily deal flow is a little bit lower. And like you said, sometimes you got the deals that are available, but they're just not going to make any sense financially. What about, so when you take these car washes, it's going to be a little different than your multifamily in the sense that, multifamily, you're basing everything off of the net operating income and what the current cap rates are. When you exit a car wash, can you maybe talk about some of the differences between multifamily when it comes to the sale?
Yeah, so when it comes to sale, just like any business, they really look at your EBITDA, and so that's super important when you are exiting these car washes. A really good exit will be anywhere from 12 to 16% of that on a purchase price. So it really, depending on the location and the asset. Our main focus is actually we're not going to shoot for an exit. We're going to shoot for a refinance. So the main goal is to draw that net operating income up, go ahead and shoot for a refinance and pay back investors. And so that's going to be the main focus is your first 3 years, really shoot very heavily. And with our marketing geographically, we're going to make sure that, and that's why I didn't want to have it spread out, is that we're going to really basically take over Charlotte by geographically marketing heavily, boosting the memberships of these assets. So once those are boosted, from there, we can then go ahead and refinance into another conventional loan, go ahead and pay back investors, and then keep the properties.
Yeah, and hopefully at that point the interest rates will have come down a little bit, and I think that that'll provide a great opportunity when it comes to that. Aside from the marketing, the online marketing, that kind of thing, what really is the big distinction between, say, your opportunity versus another car wash that's maybe self-service down the street?
Yeah, and are you saying from a consumer's perspective?
Exactly. From a consumer's perspective, what's going to look different, if anything, between the two? Besides it being a new facility, right? That alone makes
that alone goes a long way. I think having someone and having the right type of building. It's all about how it looks. When you walk into an apartment complex, if it has fresh paint, fresh cabinets, and it looks and feels good, you're gonna get a sell. Just like a new car. New cars, they want to make sure that they're cleaned. They want to make sure that they're detailed. And so that's how it is when it comes to these car washes. The car washes that are in comparison, they look exactly like each other, same colors, yellow, red. It looks just like an old-fashioned car wash. It doesn't look like a higher-end type of building, which we're going to go more towards the brick, the glass structure with LED lights.
Okay,
that
cool.
higher end, more type of look, which is going to draw that attention. On top of that, it's helpful that our competitors are not marketing on social media, which we're going to be able to market on social media and draw that type of consumer to our properties. And then again, it's all going to be geographic. If you're living closer to a car wash that's 5 minutes away, you're tending to go there more than if there was a car wash 15 minutes away. Now, it all depends if that 15 minutes is along your drive or your commute, and what type of packages they offer when it comes to waxing, when it comes to, undercoat or pressure wash under the body. All those things do matter, and the different type of washers. If you're using, your regular brush, or you're using hands-free, where it's high-pressured water, all those play into a different factor. But I think what's really going to separate us is the social media marketing, drawing people in, the type of customer service, and the feel of our car washes. Where it's once they drive through, they're going to be able to use their vacuum. We're not here to nickel and dime you on vacuuming and things like that, or you having to pay $60 a month and then tipping someone, which technically, you're now at 80 to 100. Depends on how many times you go and how many times you tip. So,
yeah. And what is the target as far as the membership? I guess will there be different categories of membership, or what have you thought about it from that standpoint?
Yep. No. So different categories of memberships. We're going to have 3. One's an Express, one's a Deluxe, and one's Ultimate. And that our Express is going to range for $24.95 a month. Our Deluxe is going to be $29.95 a month, and then our Ultimate is going to be $34.95 a month. And then on average, depending on which one, it costs us anywhere from $1 to $1.80 to run the cars through.
Oh, wow. Okay. And as far as you said, there's not, are there any employees on site, or what, is it pretty well all automated? So you don't have the
all automated
cost. Yeah, that's great.
The lovely thing about these operational type of businesses is that they're all automated. You have no one on site, so you don't have to worry about that overhead of employees. And as you know, you worked at one as well as I did. There's a lot of turnover. You have a lot of high school kids that are working there. You got to pay your manager very well, so there's not so he doesn't turn over. But there's normally a lot of turnover with the employees that are on site. So it's important that we went to the aspect of, okay, no employees on site. However, we are going to make it all automated. With technology these days, with AI these days, we can do that where everything's automated. They're in and they're out very quickly. We can run anywhere from 40 to 60 cars per hour being this way, depending on how many bays. If we run them side by side or just one single bay, we are looking to have 2 bays side by side to increase the maximum output of the cars. So we can run around 60 to 65 cars per hour with no employees on site.
And how does, from, again, probably more curiosity on my end, but as far as supplies, obviously there's supplies that you're going to need on site, whether it be the soaps, whether it be the waxes, all that stuff. How does all that work just from a logistics standpoint? Is that just come to the location and then the owner refills, or what does that look like kind of from behind the scenes?
Yeah, behind the scenes for these particular opportunities, now we will have employees in-house that are driving out to the properties minimum 3 times per week. And it's beneficial that they're all here in Charlotte. So they're driving out, visiting the properties minimum 3 times per week. We're going to have regular maintenance or regular contractors on call for pressure washing on a weekly basis to make sure the property looks in extremely high class. I've been to some car washes that the car wash is more dirtier than my car.
Right.
And then it says like, well, is it actually cleaning my car or is it damaging it? So it's very important on that. When it comes to any of all those chemicals, all technology based, just like those new washer and dryers. When your chemicals start to get lower, they'll go ahead and place an order by themselves to Amazon to ship you detergent. So that's how these systems are set up, that once they hit that threshold, basically you're on E, but you have around 50 more miles for reserves. That's what it will do. A couple days, the chemicals will get delivered on site, and one of our team members who are in house will go ahead and switch those chemicals out.
Oh, that's great. Very interesting. Okay, well, I guess maybe let's go to how people can find out more about you and more about the opportunities if they want to invest.
Yeah, very much so. So thanks again for having me on. Love always giving back knowledge. The best way to get in touch with us as a company is go to our website, qccapitalgroup.com. Once you go on there, you'll see at the very bottom where you can actually fill out your information, and my team will send you a handwritten book or hand-signed, not handwritten, hand-signed book to your front door free of charge. You don't have to pay anything. You don't have to pay sales, or you don't have to pay taxes or shipping costs. We mail it directly to you. And that is a multifamily book that I wrote to help you get started in the multifamily industry of passively investing. And once you go ahead and fill out that information, you're automatically on our email list. So you'll then get updates of our car washes that we'll be releasing. And we're only releasing those to 5 investors starting off before we release those to our larger investor base and any multifamily opportunities that we have.
Wow. Okay. That sounds really good. And then you mentioned having a son. What outside of if you're not, working with the car washes, working with the multifamily, what do you like to do outside of that?
Well, I love my little man. I'm a single father, so I have him 50-50, and he is my world. So thankfully I had him this weekend. We watched some Formula One right when we got up, and then him and I had a nice, beautiful dinner together, just him and I. I like to normally take him to the park. He normally wants me to run while he rides his bike, so I get a lot of good running and exercise in. We like to travel, go see the zoo here locally in the Carolinas, which he loves elephants and loves lions, so that he has a blast doing that. And then travel to the beach, to the mountains, and then hopefully soon I can get him a passport and we can travel somewhere overseas and just explore life together.
Yeah, that's great. That's really neat. Well, if you ever head up to North Carolina, the Whittier or kind of Bryson City area, I've got an Airbnb up there, so we'd love to host y'all. So
yes, for sure, I'll definitely let you know.
Yeah. How about any good book recommendations that you have? Again, some of this stuff I just asked for myself. It's okay if I don't have it yet. Anyway, anything good or any recommendations?
Yeah, besides the one I wrote, I Think and Grow Rich, phenomenal book. If you haven't read it, highly recommend it. Also, Mistakes Millionaires Make. My coach, Joe Fairless, brought me that book. That is a it's a sort of phenomenal book. Really dives deep into business and things like that. Mistakes Millionaires Make.
Okay. And so you were coached by Joe Fairless. That's awesome. Okay.
Yep, still am. He invests into all of our deals. I love his private group that he has and everything he's taught me.
Yeah. All right. Fantastic. And then maybe just some investing advice for some folks that might just be getting started on their journey. Any recommendations or advice you can provide?
They're already starting off on the best foot by listening to this podcast. Number one. Two, educate yourself. Get with Keith, educate yourself, get an understanding of what's going on in the current market. If you do have capital set aside, just make sure you analyze the deal. Go deep into the deal before you place that capital into it, because we are, getting into those rough waters right now with the current market environment, with the Feds indicating they're going to raise interest rates coming up here twice this year. So just keep all that in mind.
Yeah, makes sense. All right. Well, I think some great advice, and I think you brought a lot of value to the listeners. So I really appreciate you being on, and it's been great just getting a little chance to get to know you just a little bit here. So
likewise.
Thank you, Chris.
Thanks so much for the time. All right.
Thank you.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.